Good morning, everybody. Today's video is going to be pretty quick because I will only focus on US stock market indices. So I will talk about the S&P 500, I will talk about the Nasdaq 100, and we will end with the SOX index, which is the semiconductor index. For European stock markets, I decided not to show you any chart because the technical outlook has been quite complex over the last months. With the markets, European markets making very complex trading ranges. If you want to have my opinion and look at European charts, I suggest you to look at my daily this morning with a focus on the CAC 40 index. So if we switch, if we start with the S&P 500, this is a very basic chart, candlestick chart with a 200-day moving average and 50-day moving average. So what we can see here is that the S&P 500 is still taking a breather. So we are still in a consolidation phase on the S&P 500 with two successful tests of the 200-day moving average. The first one was in February, followed by a strong revival of the S&P 500. And this week, another test since last week, I would say, since late March, another test of the 200-day moving average, followed by a new technical bounce attempt over the last two sessions. So technical bounce attempts, it's too early to call for the start of a major bullish reversal. If the current technical bounce continues, which is possible in the short term, keep an eye on the 2700 area, which is more or less the declining 50-day moving average and also a bullish gap, which was open in late March. I think it will be pretty difficult to break above this zone in the near term. So watch the 2700 area in the near term if reached. I will show you another chart on the S&P 500 with the mark indicator. So you have setup 9s, setup 9 sell, which are here, and setup 9 buys. What we notice is that there was a first setup 9 buy, a very good one in February, so in early February, followed by a massive recovery of the S&P 500, and then a second setup 9 buy completed a few days ago, followed by a technical bounce of the last two sessions. So this is a relatively positive contrarian buy signal, a positive signal, but I'm not really keen to play this second setup 9 buy aggressively. Usually what I like to do is play the first setup 9 buy because it could be just a correction within an uptrend, but I don't like to play aggressively the second 9 because the rule is usually a technical bounce 2-3 sessions, then after that the risk of a new decline. And the fact that we have two setup 9 buy in a quite short period of time, two consecutive ones, shows that the market is really weakening. We had a breakdown below the TDST support line and two declining TDST resistance line now, with resistance, a very important resistance zone forming at 2763. So okay for a technical bounce from here, but I think it's a dangerous game, and that the risk is a continuation, let's say within coming weeks, renewed weakness on the S&P 500. Now if we switch to the Nasdaq 100, this is obviously a leading index worldwide, one of the strongest index over the last few years. What we can notice that this index did not reach its 200-day moving average so far this year. Each time the Nasdaq 100 approached from its rising 200-day moving average, buyers were very aggressive and triggering a significant recovery. So we saw that in February, and we saw that again this week. So new technical bounce attempt on the Nasdaq 100, possibility of a new technical bounce starting. I would suggest to keep an eye like on the S&P, around 2,700. I would suggest to keep an eye on the Nasdaq 100 around 6,800, which is supposed to be an important resistance zone and includes the declining 50-day moving average. I will end with the SOX index because I find that the chartist pattern of the SOX index is very, very interesting. I focused on the SOX index this week in one of my daily and found that there might be a typical bearish chartist pattern forming on the SOX index, which is called the broadening top, or also called megaphone. This is the same pattern. So the rule is that usually after a very strong rally, you have a top formation, a very complex top formation with ascending tops. So you have three ascending tops here, 1, 2, 3. Other analysts label it A, C, and E, with descending bottoms. So you can see here. And this is exactly what we are seeing right now on the SOX index since the end of last year, suggesting that the correction is not over yet. So the rule is generally when you have such a complex top formation, as you can see here, the rule is to retest the support line a third time, and even break below this line. Which means that in the case of the SOX semiconductor here, I don't have a strong conviction regarding the start of a sustainable rally. I think that what we can get is just a technical bounce, and then after that renewed weakness back to the lower part of this pattern, which means that the US stock market may continue to consolidate, possibly with semiconductors leading the correction. Thank you very much for your time and have a nice weekend.